Yeah. Yeah, hopefully you can see my screen now. Is that working, Michael? You can see that? Yep. Okay. So, welcome everybody. I'm glad you could take some time today to join us. We're excited about the summer pool. We're thinking it might be a big one, and excited about a lot of interesting projects around the state. Um, we're going to try to do this fairly quickly, to not take up too much of your time and kind of move through both some big picture stuff and some of the details, some of the nuts and bolts of applying. I assume you all have my contact information, so please, if we don't get to all of your questions today, don't hesitate to send me an email, to give me a call, whatever, to help you through the process, whether it's a sort of big picture question or a detail. Happy to field those. Um, okay, so I want to start off with a little bit of a market update here. The bond market, obviously, the economy in general has seen some volatility this past year. Um, though, and we are, in what people often refer to as a rising interest rate environment. But that doesn't necessarily mean that rates are just kind of constantly increasing. It's sort of an assumption I hear that sometimes that it's we don't know, of course, where rates are going to be 6 months from now or a year from now, but just to get a sense of where they've been this past 12 months, you can take a look at that graph on the top left of this slide. That line basically represents municipal bond yields, which correspond with rates over the course of the past 12 months. And you see they start at a little over 2.25 and experience some volatility and peak there kind of late last calendar year. And then you see where they end on Monday, really not too far off where they began, where they were 12 months ago. The graph in the top right, the daily yield curves graph, basically, most of the time, traditionally, it tends to be a line starting on the bottom left and increasing, rising as it moves to the right, indicating that shorter terms, shorter maturities have lower rates, and longer terms have higher rates. That's that we've experienced some flattening of the curve this past year, and I've experienced some inversion actually, with that front end of the line there. There's that dip that indicates that rates are actually a little bit higher for the first couple of years of a serialized bond, and then they are 5 years in, maybe even 10 years in. But then, yeah, rates do rise a little bit after that. But one of the kind of takeaways of this slide is that when the Fed raises rates, that tends to impact the front end of the curve more than the long end of the curve. So the tends to be that the longer you go, less impacted by the current interest rate environment. I think I explained that okay. Michael, if you want to chime in, by all means, don't hesitate to do that. Or if folks want to put questions into the chat, we can take a look at those as well.
One comment here. I think we're not getting the presentation.
Okay.
View here.
Sorry about that. There we go. Apologies. So the graph on the bottom left, I thought it was kind of funny that it used this March Madness name to describe what has happened in the bond market just in the past couple of weeks in response to the sort of banking issues, to the Silicon Valley Bank fiasco and concerns in the banking industry. Because from my perspective, there hasn't been sort of a mad reaction in the bond market. Some people sometimes talk about a flight to safety, where investors move to more safe investments. And I think this indicates that some of that has happened in the past couple of weeks. But I think one of the takeaways is that rates haven't been impacted substantially by any of those recent volatility in the banking world. And here on the bottom right are just our assumptions where we are now. If you ask me for a schedule about where what debt service would look like on a loan, this is what I'd use. For a 10-year bond would be talking just a little under 3%. For 20 years, 3.68%, and a 30-year loan be just a little bit under 4%. But again, those are assumptions, those are estimates based on current rates. We don't price our loans until our bonds are priced at issuance. So in this case, that won't be until late July, maybe mid-July, or maybe even early August. So it's hard to know for sure.
Yeah, and one thing to keep in mind with that date in July is that, as folks are probably aware, there's this ongoing thing called the debt ceiling limits what is called the X date, which is the date at which the Treasury will run out of capacity to issue new treasuries, is in June. And so, or excuse me, in August. The X date is in August. And so we don't exactly know what that's going to look like in the market come summer, which is when, potentially there could be some volatility. This sort of company line from a lot of places is that, Congress is going to figure this out, but, take what you will of that perspective. I think what we know is that anything can happen in DC that is beyond the imagination. So just a small asterisk on our timing for the summer pool. We'll certainly let you know, but there are things that are definitely outside of our control associated with the debt ceiling. We're just gonna have to wait and see what happens come summer in terms of those negotiations. And we'll obviously be communicating with you if there's any volatility that is sort of untenable for going to market prior. But it's just something to be aware of. We don't know what's going to happen, but it's a known unknown.
Yeah, and just to follow up, as I've said earlier, if you ever have questions, don't hesitate to reach out. Also, if you're, through the application process, as we get closer and closer to closing, anytime you have questions about what's happening in the rate environment, don't hesitate to reach out for updated schedules. Happy to do that anytime. Okay, so I want to make sure before we dig into the application process that folks are aware of the capital planning forum that's coming up in a few weeks in Barrie on April 13. We're excited to be bringing folks together from around the state to really dig into this topic. It'll be our second annual forum. It's obviously important to us that communities are planning for sustainability in general and in different ways. It's we're going to talk some about planning for climate resiliency and things. So again, if you have any questions about that, don't hesitate to reach out to me. One thing that's happening generally around our country is there's a lot of federal funding becoming available for energy projects of different types, and we are working to capture as much of that funding as possible for Vermont and for our borrowers. And we are in the process of working with agencies that are making funding available, including the EPA and USDA, and we hope that we'll have some some lending dollars available, hopefully by late this calendar year, specifically for solar projects and related expenses, but also likely for other kinds of projects that are about energy production, green energy production, and energy efficiency. One of the kind of since we'll be talking about the pool loan program today, mostly, one of the things to note about those programs is that they would be presumably complementary with the pool loan program. So, if you had a big project that was part energy and part something else, there'd be likely an opportunity to borrow some money through a subsidized energy loan and get funding for the rest of the project through the pool loan program, something like that. Or, could have separate projects that would kind of work together. We don't know exactly about rates and terms yet, but subsidized rates. We'll just leave it at that. So the two main programs at the bond bank are the pool loan program and the state revolving fund program for water and wastewater and stormwater projects. They're separate programs that the SRF program we co-manage with with DEC. And today we're really going to talk about the pool loan program, which is sometimes folks get a little confused because they get communication from us about both of those things. But the pool loan program is a distinct and separate program, and we issue bonds to fund it and pool all of your loans together, essentially, to repay those bonds that we issue, sort of on behalf of all of the communities in the pool. And we can provide financing through that program for most infrastructure needs that you might have, as long as the project has a useful life that exceeds the life of the loan. That's kind of the main thing. And again, another main component of it is that we get a legal opinion from bond counsel that it's that's appropriately authorized by the voters. And that's often when folks ask, that's often one of the first things we tell folks is that early in the process you should really be talking with counsel. And hopefully most of you on the call have been, if you're planning to apply for the summer pool. Advantages of the program are basically that they enable this enables Vermont communities to tap into the bond market in a cost-effective, efficient way. We're able to achieve something of an economy of scale, and bring down the transaction costs substantially, and use our rating, which is a AA+ rating, to bring down the cost of capital on those loans. They generally are scheduled so that there's a level principal payment with declining debt service over the life of the loan, and the first principal we can defer principal up to 5 years. Usually we defer it that first year, kind of during the construction process. And if you have any other questions, if I haven't sent you a schedule in the past, I've probably sent most of you schedules to give you a sense of what the loan would look like over time. If I haven't sent you one, don't ever hesitate to ask for those. Those are pretty easy for me to put together, and they give you a concrete way to look at what the terms of the loan would look like. Okay, here's some of those terms. Payment dates are May 1st and November 1st. May is an interest-only payment, and November is interest and principal payment. For the underwriting process, we may reach out for things beyond what we get in the application. Generally speaking, we want to see that that you're planning appropriately over time for taking on debt. We also are happy to help with the process prior to the application of figuring out, of taking a look at your position and your needs, and basically helping you through the planning process by helping you sort of understand what your sort of debt capacity might look like, and what would be maybe too stressful of a debt load, and what might be sort of an appropriate approach over time to taking on debt. Let's see. There are no fees associated with the application process, and you don't commit to the loan until you sign a letter of commitment after we get our board authorization approval of the loan, which in this case will be late June. So one of the other things that we do with loans, that's sort of just a value we provide to our borrowers, is that we monitor for refunding savings. Much like in the way that people refinance their home mortgage by when interest rates drop, by essentially taking out a new loan to pay off the old loan at a lower interest rate. We do that with our bonds and pass on the savings to our borrowers. We don't issue a new loan or issue a new bond exactly, but because to avoid the costs of issuing, creating a new loan agreement, et cetera, the legal costs and everything. But it looks a little different than it would if you were to refinance your mortgage. In the case of refunding, we issue rebates, and here's a schedule that shows what those rebates then look like on the schedule over time. They're sort of they're not uniformly distributed over the life of the loan. We have made some changes. A couple of years ago, we made some changes to make them a little bit more front-loaded, so you'd see more of those savings earlier in the process. I should also say that bonds don't become callable until 8 to 10 years in. So there isn't necessarily an easy opportunity anyway for early repayment, but certainly we can have that conversation, and it's not totally out of the question, but probably not for the first 8 to 10 years. I don't know if Michael, if you want to share any words about refunding or the callable aspect of bonds.
Yeah, we typically have the option, as Ken said, a little bit after 8 years. What we do, though, as a matter of course, I mean, it depends on market conditions, is we just try to get the absolute lowest rate. There's always kind of a trade-off between how much you want to pay for the option to refund the bonds for savings over time, or how much you want, a lower rate upfront. And we try to go for the lower rate upfront, figuring that's the kind of the safest bet, and that actually played out pretty well over the past couple of years, but it is a little market dependent. But the good news is we'll be there in the background looking for savings if they're available.
Great, thanks. So for the application, so these are some of the things you're going to need. Audited financials, we ask for 3, but a minimum of 1 year. Like I said, the bond counsel opinion letter, it's an important part of the application. These are our general obligation bonds, so we don't hold a mortgage on property. We depend on the authorization, the voter authorization, and the general obligation. So that letter is quite important. We will ask for debt to understand what debt you have. And there's a form. I'll get to this, but there's a spreadsheet that you can download while in the application process, and then upload with that information. If you have a capital plan, we'd love to see that. And we also love to get as much impact data as possible from folks. We like to tell the stories about what communities are doing and how they're using bond financing to develop their communities in various ways, largely to encourage other communities to sort of to learn from what other communities are doing. And to just tell the story of the great work that our communities are doing. So there are a lot of requests. There's a lot of stuff in there in the application about requesting information about impact. Most of it's not going to apply to any given project. I mean, it's not required. You can skip over most of that stuff, but it really is helpful if we can get some good information about that stuff. So the state of Vermont auditors checklist, we'll also need that. Again, this is all in the application. And you can look in the application anytime on the website and kind of just create a login and then cruise through it. And it hopefully is relatively straightforward. We have received some feedback that it's gotten much better in recent years. So I'm glad to hear that feedback. And whatever more feedback you might have, always happy to hear. We like to know what the 5 largest tax or rate payers are. I say tax or rate payers depending on which form of the application you're doing. If it's a governmental activities application, then we'd love to see obviously the largest taxpayers. But if it's an enterprise application for an enterprise loan, then ratepayers is what we need. If you're going to be spending some of the funds prior to the approval, then there should be a declaration of official intent that says we intend to use funds from that will be authorized by voters in the future for such project. Bond counsel can inform you about developing that. Also, especially for special districts or enterprises, we like to know about rate structure and what post-project revenue and expense projections are like. We need to see that you're planning appropriately to cover the debt service over time. For school districts, we like to see education spending for the past 2 years and the current year, and we need the homestead tax rate for all the towns in the school district. The annual post issuance compliance form, we need to have that from if you have previous loans with us. And that's if you haven't done that yet, if you haven't seen that yet, we're going to talk about that in a minute with reporting. But it's basically just a checklist that says, we're doing all the things that we need to do to comply with a tax exempt loan. So some of the things you keep in mind while you're applying, while you're completing the application. Like I said, there are different forms. Choose the correct application. Governmental activities or enterprise, and use Chrome or Firefox or Edge, but not Windows Explorer. And the contact person should be the person completing the application, who will be our best contact throughout the loan process. You can add alternate contacts. There's a box. Is there anything else you'd like to know? You can just put in information there about other people we could contact as well. there's an opportunity to describe different projects in the application. Project 1, project 2, project 3. If there are different components to a project, that maybe there's a I don't know, a road part and some other infrastructure that's related but sort of separate. You can put those together and bundle them together in a loan. That's fine. Assuming there's some coherence to the two of them. You can also apply separately for different loans. There's a little bit of if you're going to submit separate applications, you need to do that either through creating a separate login, so that you can have 2 live applications prior to submitting, or you have to finish one and submit it before you can open up another one. So so you can have multiple projects within the same application. That's fine, or you can have multiple applications. Just be aware that it's a little tricky if you have multiple applications. In the application, you can let us know what loan terms and how long out you'd want to go with principal only, interest only payments, and defer principal for. Traditionally, like I said, most folks skip the first year of principal. I think that's the sort of the default on the application. Again, impact data, but a lot of it won't apply to your project. The application will automatically save as you move through the application. No need to click save draft after each page, but click save before closing your window. These aren't brand new. These bullets at the bottom, but they're relatively new. If you did an application a few years ago, this might be new. You're required to review the application in its entirety prior to submitting, and you can save a PDF of the application after submitting, and you'll get a submission confirmation as well. So here's what it looks like on the website. You can click login at the top right of the screen and create a login if you don't already have one. If you do have one but aren't able to access it for whatever reason, don't hesitate to reach out. We can help you with that. Then you can access your application by clicking apply now and by clicking on the my submissions. Clicking on my submissions, you can get what submissions are currently active, as well as what you've submitted. In the application, again, you'll see there different kinds of applications: school district, government activities, and special district or enterprise type. It's important to get that right because of the questions that follow, the fields that open are specific to those types. There's some different requirements. And when you're moving forward and backward, you should really use the red buttons toward the bottom of the page, as opposed to the going back in the browser. That's just a good best practice there. This is what I was saying. There's the review button. You have to do that before submitting. If you look for a submit button before you review, you're not going to find one. And like I said, you can download the PDF upon submission. The timeline is, we do a summer pool and a winter pool, and we're talking about the summer pool right now. So we're hosting our webinar now, a little before where this graphic indicates, but May we're holding the webinar. March we're holding the webinar. I'm getting ahead of myself. It's not May out there yet. But May 15, the applications are due, and we'll if we get some before that, we'll start looking at them, but official review starts in mid-May. And then by late June, we hope to have presented them all to our loan committee, which is our board, and get authorization from them, get approval from them, so that we can then price and close on the bond in July or possibly early August. And then we'll do the process again next fall, host another webinar in November or so for a December application deadline, and so that we can then issue bonds to fund those applications, those loans in the first couple of months of the next year. So if you don't make this pool, for whatever reason, if the timing's not right for you, but the opportunity will come around again in the fall. Back to what I was saying earlier about the market, it's impossible to know which would be a better when rates would be lower in this pool or the next one. There's probably no compelling reason to think that one would have a lower rate than the other. So on our website, you can download forms here that you would need after closing, but we'll also send forms right after closing, and always be on hand to help you with the understanding what forms you need and helping you access them. I mentioned reporting. Our reporting requirement is an annual requirement. March 1st, we require two things, basically. The annual post issuance checklist, compliance checklist, which is, like I said, it's pretty much just a checklist. It says you've basically kept all the documents, you've adhered to the rules of tax-exempt borrowing. And then we also require an annual submission of financial statements, ideally the audit, ideally by March 1st. I know that's hard to have the audit. A lot of folks don't have their audits by March 1st, but if it's just self-reported financials, we'll take those. If there's an audit draft, that's helpful too. And then just once in the course of the project, we'll need the project completion form. That's here. We include that with these reporting forms, just to keep them consolidated for you. So I hope I've answered at least most of your questions. I actually can't see the chat. I don't know, Michael, have you seen things come in?
Been answering questions there as we go along. So those folks can see that in the Q&A, and no chat questions. But we can open it up here. Just raise your hand, I guess. Oh, we got one question. So I'm going to, Ken, if you want, you can make me host and I can navigate the okay. Terrific. So let's see. Here, I can take back, I forgot. Let me take back.
I've got it.
Okay, great.
You should be host now.
All right, Jim, let's hear your question. It looks like you're on mute.
Okay. Can you hear me now?
Yes.
Okay. Hi, Ken.
Hi, Jim.
Mike, how are you? So guys, I just a question. We've got some big projects coming up, a paving project, 2 million, roofing project, 2 million, a renovating of a heating ventilation system, probably $3 million. Just my concern and question is how to balance this, because you got 12 weeks in the summertime. And I mean, it's a short period. So how do you go about balancing this stuff with borrowing the funds and making sure, great to borrow 2 years before you're going to use it, but does it make sense? And what do you recommend? And do you have any advice? What should we be doing?
Yeah, Jim, what we see typically is folks using bond anticipation notes to sort of bridge that timing. And then obviously we're in the market twice a year. So you could do one or more loan issuances during the period of construction to refresh those bands if you have a credit limit with your depository institution or whomever, so you can sort of refresh and get more capacity there. So that's how we see people bridging things typically.
How do we get the bond anticipation notes? 'Cause
Yeah,
I've not done that.
yeah. It's it's a fairly straightforward process. It's one way in which the bond bank has a fairly symbiotic relationship with the private banking community. So best thing to do there would be to engage local bond counsel. As you're probably familiar, there's a list of councils on our
Yes.
website.
Yes.
They'll know exactly what you're talking about and can help
Okay.
you get the legal framework in place. And then it would just be a matter of, we typically see people reach out to their depository institution, but, certainly you could expand the number of people you talk to for that as well. The other thing is, Jim, and this is, you'd be taking interest rate risk, but in terms of if you know that you're going to need the funds, over the last 10 years, it's been a painful process to borrow more than you needed because reinvestment rates were so low. But as
Right.
Ken mentioned before, reinvestment rates are fairly high right now, as compared to, Ken mentioned the yield curve being fairly flat. That means you can come close to earning your keep in terms of the debt service costs with reinvestment rates. However, that could change, in a moment. So you're taking a little bit of risk there. Although we could help you, if you knew exactly when you need the funds, we could help you with buying treasuries or something that would mature associated with when you'd need the funds. But typically, if you're unsure what the draw schedule is going to look like, using a ban is typically the way people will manage that.
Right. Yep. So it sounds like I should go forward anyways with the application and getting everything in line. And then maybe talk about how we go forward, because my fear is this: people think, oh, we need all of this work done, and they're going to be hell bent in trying to line things up. But I've been through project after projects, and I got to tell you, 12 weeks goes fast.
Yeah, and I mean the thing about us, Jim, is that we need at some point it'll be like line in the sand. We need to know exactly how much you need,
Yep.
and it'll be and you'll be committed to that amount because we have a lot of structuring that goes on in the background.
Right.
So just keep that in mind. We'll need to know not that long after your application exactly how much you're going to borrow, and don't have flexibility after that date.
Okay. Just one last question, if I can. So I've been involved with projects. You get $3 or $4 million projects, and end of the cleanup, you may have some residual left. Now, do you have a little bit of wiggle room with the residual that's left for doing other stuff?
Yeah, it has to be an otherwise authorized project. Or if it's a small amount, under statute, sometimes people will apply it to the next principal payment that's due.
Yeah, I've seen that done as well.
Yeah, but generally we don't want you to overborrow. We want you to try and align your borrowing with the project you're anticipating.
Yep. Okay. All right. Well, listen, thank you so much.
You're
Ken,
welcome.
thank you for all your help too.
My pleasure, Jim. Thanks for all your questions. I always love hearing about what people are working on, and I love it when people reach out.
Well, we'll try to get the stuff into you, and get the application firmed up a little bit more.
Great.
Okay,
If you have any questions while you're working on it, don't hesitate to call or email.
thank you so much.
Sure thing. Not seeing any other questions in the Q&A right now. Anybody else want to put up a hand, or maybe we've covered it all?
Yeah, good dialogue here in the chat or in the Q&A. You know, applications up now, so if you want to start filling things out, that's great. There's no real reason to wait other than your time constraints, as most folks have their most recent financial report completed already. Was a question from Dana here about the capital planning form. I gave you an answer, but basically, we're gonna just confirm attendance. We don't have a huge room, and that's why there's some limited space or limited number of seats. We'll confirm everything. We expect, you know, anyone that's on the wait list should be able to get in, but we'll confirm that early next week.
Jim, do I see your hand up again?
Yes, I just want to say, and I made a comment, I think, to you, Ken, that the application process prior to Michael was a tough one. I mean, it was laborious, to say. It seems kind of simple right now, and I just want to, am I missing something?
I hope not. That's the idea.
No, I mean, you know, our idea is that, you know, we'll follow up as needed with particulars. But yeah, you know, it's meant to be relatively simple process. You know, if you have the voter authorization to borrow, and the useful life of your project is, you know, exceeds the life of the loan, then, you know, we're pretty happy.
Yeah.
We like to, you know, obviously in the underwriting process, we'll make sure that, you know, the folks aren't borrowing beyond their capacity, but, you know, it tends to be something that Vermonters are pretty good at, is not borrowing beyond their capacity. That's
Drive.
I know. Maybe it's so anyway. It's Michael's smiling at me. Not trying to encourage risky behavior or anything, of course. But yeah, it's and it's, you know, I love to have a dialogue with folks through the process, so that it's less about complicated application on the front end and more a conversation that we're having with you and the community through the process, and also over time in the years ahead, as you're thinking about next projects, et cetera. We want to be as a partner with you in developing your communities over the long haul. So yeah.
Well, we appreciate that.
Right.
Thanks so much.
There are no other questions. Are we ready to wrap it up? Okay, my contact information was up on the screen earlier, but most of you, I think, have it. Again, don't hesitate to reach out anytime. Thanks for
Thanks
taking
a
the time
lot.
to join us.